Hello, lovely people. I'm Kate Hill, and I'm here to give you the best, unbiased and honest commentary about the property markets, along with some really awesome hints and tips, so stay tuned. Now, before we get started, everyone, just want to ask you today's question. If you're in the market to buy a property in the next couple of months, where are you thinking of buying and why? Have you heard something or read something interesting that's tweaked your fancy recently? Let me know in the comments below. I'd love to know what you're all thinking. And just really quickly, I'm giving one of my webinars next week with Terry Ryder. I'll put the link in the description below so you can register. So be sure to sign up and ask your burning questions about the property markets for 2021. We're going to discuss the prospects for a nationwide property boom this year and beyond, and really just provide a forum for you to ask questions about where the markets are heading, which ones will show the best growth, and which ones to avoid. So ask anything you like and we will try and get those answered. Okay, so today I'm going to cover off on house rents rising across the nation, investors showing signs of buying action, the Reserve Bank of Australia expecting a 30% price rise in property. As a sign of things to come, house rents rose across most of the capital cities in 2020, headed by a double-digit rise in Perth and also in Darwin. Brand new data from Domain shows that the average result for the 8 capital cities was an annual rise of 5% in house rents, following a 2% increase in the December quarter. Perth was the city leader, up 13.5%, followed by Darwin, 10.6%, Sydney, Adelaide, Brisbane, Canberra, all recorded annual rises between that 3 and 5% mark. Even Melbourne, despite its lockdown, saw a 2.3% annual rise in house rentals. But no surprise to those watching these videos for a little while now, the biggest rent rises occurred in regional Australia, with centres like Rockhampton in Queensland, Portland in Victoria and Yass in New South Wales achieving rent increases above 15%. It's quite something. Apartment rents presented a two-speed market, with the smaller capital cities recording stronger uplift, but inner Sydney and inner Melbourne experiencing rental declines. Unit rents rose 13% in Perth and 8% in both Adelaide and Darwin. Brisbane and Canberra were up 3 to 4%. Now, as we also mentioned last time, investors are showing increased action in our property markets. The Australian Bureau of Statistics reveals a surge in loans for investor housing, with a 6% monthly increase in November and 4% growth in the year to November. So overall, the ABS reported a record high total value of new loan commitments with housing, with annual growth of 23.7%, with owner-occupier loans leading the upward charge with a 31% annual rise. The sum of new loans for housing in November stood at $24 billion. The ABS report that loan commitments for existing dwellings rose 5.9% and were the largest contributor to the rise in November. The value of construction loan commitments grew 5.6% in November, rising 75% since July. This follows the implementation in June of the government's home builder grant. Investor buying is set to increase even more this year as consumer sentiment increases and people are looking for better yielding investments, a more stable asset class, and long-term visions for their financial futures. Now, my little reminder, guys, my shameless beg to all of you watching who aren't subscribers yet, please hit that subscribe button down there and the like button while you're down there. It does really help me get this video out there. I do really appreciate it. Thank you. According to the Reserve Bank of Australia, heightened consumer confidence, helped by record low interest rates, could push property prices up 30% in the next few years. The RBA predict that home values could rise by as much as 30% within 3 years due to borrower belief that rock bottom interest rates are here to stay. Ultimately, the RBA sees rising asset prices, such as home values, as a positive. The RBA notes that a rise in house prices and other assets, such as shares, will lead to increased household wealth and improved cash flow. As a result, Aussies will spend more, and that in return will stimulate the economy and business investment. So according to their analysis, a permanent 1% cut in the official cash rate would increase real housing prices by 30% after about 3 years. Now, we don't really have a lot of reliable data yet with regard to how things are going this year in our property markets. We've had Christmas, summer holidays are only just ending, all that stuff. So we will update you as soon as we see some trends emerging for this year around our different property markets. Now, if anyone is still watching, don't forget to sign up for that webinar next week, and I will definitely see you all then. And you know that we're giving you the best commentary and content on this channel. So please let me ask you just again, quickly hit that subscribe button, click the notification bell so that you're getting all those expert hints and tips around buying, owning and investing in property as soon as I post them up. If you're enjoying all the free content, then please just click the like button too. Do really appreciate it. And I will see you again really soon. Thank you and bye.